Good evening, students. Good evening, everybody. So, how are you, students? So, students, we have been discussing about audit of banks in our last two lectures. So, we have discussed about the format of financial statements of bank, more particularly balance sheet. We have discussed about the prudential norms relating to asset classification, relating to provisioning, relating to income recognition in accordance with guidelines laid down by Reserve Bank of India. And we have also discussed the procedure of granting advances, the internal control over advances, and how an auditor obtains sufficient appropriate audit evidence in respect of advances. Besides that, we have also understood the manner of arriving at drawing power in case of crash credited limits. We have understood many other terms mainly associated with the lending business of banks, like for creation of securities, like mortgage, like hypothecation. And we have also understood about broad parameters of auditor's report in case of banks, and long form audit report. We have also discussed about the appointment of auditors of a bank. So today, students, we shall be discussing about mainly about audit of profit and loss items, audit of profit and loss account of a bank. So you know, students, that main income of bank is on account of interest received on advances. So that is the major item on the income side, on the credit side, and interest paid on deposits is one of the major items on debit side, on the expenditure side. So students, I had told you that financial statements of a bank are prepared in accordance with third schedule to Banking Regulation Act 1949, and a format of profit and loss account is provided in Form B in third schedule to Banking Regulation Act 1949. Okay. Yes, Srinivasan, you are saying in this chapter, deposit and liability are generally not talked about. No, deposits are talked about in consonance with the verification of interest paid on deposits. Okay. So as I had told you, this chapter at intermediate level covers certain basic aspects of banking. And yes, Madhvi, you can ask on BOS mail. You can ask on Zoom in last 10 minutes. Okay. So Zoom is muted now. Yes. Yes, Tambeshwari syndicate loan, you can understand it to be in simpler terms, like in case of consortiums, etc. Okay. So audit of revenue items, students, this is I had shown you annual report of a public sector bank. So this is the format of profit and loss account. Okay. So on the income side, there is interest earned and other income. So there are two heads, interest earned and other income. And on the expenditure side, there are two heads. There are three heads. Interest expended means interest paid, interest incurred, okay, operating expenses, and provisions and contingencies. And thereafter, there is net profit loss and appropriations, meaning transferred to various reserves, which are required to be made, like certain statutory reserves transfers are required, and any special reserves, capital reserves. So this is the basic format of profit and loss account of a bank. And this same format, as you can see, is given in your module. Isn't it exactly the same? Interest earned, other income, interest expended, operating expenses, provisions and contingencies, net profit or loss for the year, appropriations, transfers. Okay. So current year figures and previous year figures. Current year figures and previous year figures. Clear? So what are the items included under interest earned? Because it is the one of the major items. Interest earned. So it includes interest discount on advances or bills. So interest received on advances, interest charged by the bank on advances, and discount on bills. So whenever a bank purchases the bills, so it charges interest component upfront. Okay, so this is also interest. Okay, and yes, Srinivasan, we shall be coming to that. Please keep patience. Interest income on investments, any income which is in the nature of interest on investment, interest on balances with RBI and other bank funds. So all income which is in the nature of interest is shown under this head, interest earned. Clear? And what is included under other income? So other income means the income which is not you can say related to core operations. Okay, so the bank earns income by granting loans. So other income is incidental to it. Okay, like say loan processing fees. So whenever you take a loan from the bank, you go to a branch, so bank charge certain processing fees. Okay, so it is called loan processing fees. Similarly, in case of LCs and guarantees, commission is charged. Okay, so but this is not in the nature of interest. This is in the nature of charges. Okay, that is why it is shown under a separate head. That is other income. Okay, any credit card, debit card fees for issuance of credit card, debit card, rent, locker rent. Okay, these are all in the nature of other income, and these are separately shown under the head commission, exchange, and brokerage. Like commission on bills for collection, like some bills which the bank has received for collection on behalf of its customers. So obviously the bank is not rendering any service for free. So it is charging commission. It is levying charges for such bills collection. So these are all included under other income. So similarly, all residual heads, miscellaneous income, profit on sale of investments, commission on government business, these are all shown under other income. Okay, so remember, any income in the nature of interest would be shown under the head interest earned, and any income which is not in the nature of interest would be shown under head other income. Clear? So what is auditor's approach regarding verification of income which is reflected in the profit and loss account? So in carrying out audit of income, the auditor is primarily concerned with obtaining assurance. He is concerned with obtaining audit evidence that income arose from the transactions which took place during the period. There is no unrecorded income. So all the income which should have been recorded has in fact been recorded at the appropriate amount. Okay. So you remember I had shown you the format of long form audit report yesterday. So if during the auditor test checks that whether he has found any interest short levied or such kind of things. So therefore he is concerned that all income which needed to be recognized has in fact been recognized. Apart from interest, he is also concerned with the levying of appropriate charges like loan processing fees, etc. He is not in a position to verify each and every item, but obviously he would take a sample and he would test check. Okay. So another important thing, students, which you have to remember relates to recognition of interest on NPAs. What is the logic behind it? We had understood that when an account is classified as non-performing asset, it is the bank stops charging interest on such account. Okay. So why such guidelines are there? So it is because of the revenue uncertainty. It is because of the revenue uncertainty. So in view of significant uncertainty regarding ultimate collection of income arising in respect of NPAs, the guidelines require that banks should not recognize income on NPAs unless it is actually realized. So this is the basic thing we were discussing yesterday also. So what is the principle behind it? The principle behind it is because of the uncertainty relating to ultimate collection and realization of income. Okay. So when a credit facility is classified as non-performing, for the first time, interest income which has not been yet realized, if there is unrealized income, that should also be reversed. This applies to government guaranteed accounts also. So yesterday also I had told you that in case of both central government guaranteed accounts And in case of state government guaranteed accounts, interest, they are considered NPAs for income recognition purpose. Means interest has to be reversed if it has not been realized. Okay. However, in case of central government accounts, central government guaranteed accounts, they would continue to be classified as standard asset. Okay, this was the basic thing we had discussed. So this is the principle behind not recognizing interest income on NPAs. Otherwise, we are recognizing income on advances, interest on advances on accrual basis. Because in case of standard loans, we are certain that interest which has been debited to parties account would be ultimately recovered. Okay. And in case of bills purchased outstanding, uh, at the close of the year, the discount received should be properly apportioned between the 2 years. Say bill has been purchased near the end of year. So obviously, banks are charging interest upfront. So it should be divided between the 2 periods, because it is highly likely that a major part of it relates to the next year. Okay. And the bills for collection, I had already told you that it is normal for banks to send bills for collection on behalf of their customers. So when bill is realized, bank is charging its commission and charges. So the general procedure in this respect is that commission on bills for collection, it becomes due only when bill has been collected. Okay. So these are simple basic things which you have to remember. And and reversal of income. So students, you have to understand and learn these important points by heart, because these relate to reversal of income on NPAs. So same thing is being repeated. We had discussed in this in income recognition norms also. Now under income head, the same thing is being repeated. So if any advance, including bill purchased and discounted, becomes NPA, then entire interest accrued and credited to the income should be reversed if the same is not realized. If the same is not realized, same point which was occurring earlier also. And similarly, in respect of NPAs, if any fees, commission have been debited, so that should also cease to accrue in the current period, and these should also be reversed. Clear, students? So reversal of income is very important, and you have to always keep in mind this concept in respect of NP accounts. And there is a term, students, takeout finance. Now, what is takeout finance? Takeout finance. So takeout finance, students, you have to just understand the term broadly at intermediate level. So basically, this type of financing is used in infrastructure projects where a loan initially taken is replaced by another loan. So one loan has been granted, which is generally of shorter term, shorter duration, and the first loan is repaid by taking another loan, which is generally of a longer duration. Okay. So in case of takeout finance also, if on the basis of record of recovery, the account is classified by the lending bank as NPA. So if the account is uh, classified by the lending bank as NPA, it should not recognize income unless realized from the borrower or taking over institution. So, if the borrower has paid the amount, then it's okay. Or if the loan has been completely taken over by another institution, obviously in takeout finance it would be so. Then amount outstanding has been recovered, then it is okay. Otherwise, it would be shown as NPA, and it should be classified as NPA, and income should be recognized as applicable in case of NPAs. Yes. Srinivasan, yes, what you are asking? When will reversal be done? Reversal will be done upon becoming NPA. Okay. And say, students, when an account has become a non-performing asset, I had told you that bank would stop applying interest in that account. But it doesn't mean that bank won't calculate the interest. So what they do is they can open a memorandum account, and they would record such interest in their memorandum account for control purposes, because ultimately it is going to be recovered. Clear? And on partial recovery in NPAs, so say if in some accounts, if the account has become NPA, and say the party later on pays some amount partially, it does not adjust its overdues fully, then the question arises how it is to be apportioned, whether towards principal or whether towards interest. So RBI guidelines in this respect state that banks are required to adopt an accounting policy in this regard and exercise the right of appropriation of recoveries in a uniform and consistent manner, which should be followed consistently on a year-to-year basis. And students, how would you verify interest paid on deposits? Now tell me through your common sense. If you are auditor of a branch of the engagement team conducting audit of branch of a bank, how would you verify interest paid on deposits? Yes. So interest paid on deposits is one of the major items in profit and loss account. So how would you gather audit evidence in respect of interest expense? Now you can tell me certain substantive procedures, certain analytical procedures, whatever procedures come to your mind in this respect. Yes. Yes, anyone? No. Whether deposit receipt has been issued, that would only give evidence about the liabilities. I am talking about expenses. Yes, Kiran Kumarji, by randomly checking individual deposit accounts by selecting few accounts. Yes, yes, Pranav, that's also correct. Analytical procedure, Pranav, you are writing. Uh, Internal control and entry in bank system, okay. Same interest income like interest deposit. No, same interest income. Tambeshwari, I am asking some different thing. I am asking about the procedures. Any other procedure, students, you can think of? So we had discussed about deposits, discussed about the breakup of deposits. So a profit and loss account of a branch is lying in front of you. It shows certain interest expense. Okay. So how you would go about verifying interest expense? Which specific procedures you are going to follow? We shall be definitely coming to these procedures, but I am prompting you to think from your own mind generally. No, Sanya, inspecting register of entries, it doesn't make any sense. The whole working in banks these days is on CBS. Which register of entries you are referring to? Yes. Kiran Kumarji, it's right. Product wise, weighted average basis, monthly average deposit amount. Yes, this is one of the analytical procedures. That is right. Anybody else? Yes, interest rates. That is also correct, Srinivasan. My concern, because my concern as an auditor would be that correct rate of interest is applied, because say uh, there may be chance that bank is paying higher rate of interest on certain deposits, say like the like in some cases rate of interest, as you know, undergo change. They can undergo change few times during the year. Okay, so it may so happen that in some accounts uh, the updated, the revised rate of interest have not been incorporated in the system. There could be some error, there could be some software error. So these have not been updated in master data. Yes, that is correct, one of the correct procedures. Yes, any other things? So now we shall come about uh, what is written in your module. So how to verify interest expense? So in carrying out an audit of interest expense, the auditor is concerned with assessing the overall reasonableness of amount of expense by analyzing ratios of interest paid on different type of deposits and borrowings to average quantum of respective liabilities during the year. So this is one of the analytical procedures. So what I can do, I can see what are the say average deposits during the year and what has been the average rate during the year. So I can form an expectation that interest paid on, say, these kind of term deposits would be around so much. So if there is some huge variation, then it would alert me to analyze reasons for it. So I am building an expectation in accordance with which essay? Yes, tell me the name of essay. I am building such type of expectation in accordance with which essay, which standard on auditing. Yes, and students, while studying, while preparing for this subject, do remember that every chapter has got some weightage. Only one, two questions would come. So, like from bank audit, you may not be getting more than 5, 6 marks, 5, 7 marks of paper. So this is there with every chapter. In case of bigger chapters, you would be getting about 15, 20 marks, like chapter 5, like chapter 4, chapter 3. Okay. But even then, you can't leave any chapter. Okay, because say some case study may come in your exam which is largely based upon bank audit. So this approach of leaving out never works in C exams. Yes, which standard deals with these kind of procedures? Yes, I had asked you a very simple question. Yes, audit report is also a big chapter. I think it has got weightage of around, uh, if I am not wrong, I would have to check up. I think it should be around 10 to 12%. So I am building such expectation in accordance with SA 520. Yes, Pranav, you are right. So when I am performing analytical procedures, I am building an expectation. So my simple question was, which essay I am using here? So you have to open up your mind and try to correlate the various things. You have not to work, you have not to think in isolated compartments. You have to uh, think a topic in totality. Okay. Yes, Harshit, we will come to the tips. Okay. We will come to the tips if time permits after completing this chapter. So the auditor should obtain from banks an analysis of various types of deposits outstanding at the end of each quarter. So like this is what Kiran Kumarji had stated. And he can work out a weighted average interest rate and compare this with the actual average rate of interest paid on relevant deposits. And he can analyze the difference, if any. So such type of procedures, and the auditor should check on a test check basis calculation of interest paid. So this is also important things. Okay, calculation of interest paid. He would be randomly checking through his sample that interest has been provided on all deposits up to the date of balance sheet. That is saving deposits and term deposits. We know that interest is not paid on current deposits, on current accounts. Interest rates are in accordance with bank's internal regulations and guidelines given by head office of the bank. Interest on saving accounts are in accordance with the guidelines and RBI guidelines. Okay, so students, in audit procedure type of question, if you are asked to write audit procedures, so say it is a 5 marks question, and then obviously you would be writing at least 4 5 procedures. So when writing, take care to see that you are writing procedures which are of different nature, so that it doesn't occur to the paper checker that you are writing one point in some different manner. Like say, I am asking audit procedure regarding verification of interest paid on deposits. So I would write random verification of interest paid on deposits. This is one point. Verification of interest rates in the system. That is another point. Okay. Analytical procedures. That is another point. Okay. So in this way, I am writing all the points which are of a varied nature. So try to write points of varied nature to the extent possible. Clear? Yes, Srinivasan, SA 520, the name of standard is analytical procedures. So this is how students we would go about verifying interest expense on deposits. And another head is operating expenses. So operating expenses is a category of expenses like rent, lighting, postage, courier, advertisement. Okay, all these kind of expenses, auditor fees, legal expenses, repair and maintenance, other expenses. So all the standard procedures would apply like in case of any other entity. Okay, like say in case of company, whatever you are seeing, so same things you would be seeing. Like say for in case of rent, you would see whether rent has been provided for 12 months. You would see rent agreement. Okay. So similarly, like in case of printing and stationery, you would be test checking few bills. Okay. Whether proper sanction has been obtained, whether amount incurred by the branch say falls within the delegated powers of the branch to incur such expenditure. Clear, students? So all other expenditures normally which you find in the case of any other commercial entity, the same audit approach, the same audit procedures would be applicable in such operating expenses also. Clear? And then there is provision for provisions and contingencies. So obviously, uh, this head includes provisions made on various counts, like provision for taxation, provision for non-performing assets, which we have been discussing. These are shown on these heads. Okay. So how the auditor would verify provisions and contingencies? So a good descriptive question of say 4 5 marks can be made on this point. Ensure that the compliances for various regulatory requirements for provisioning have been fulfilled. So generally you have to write, say it is asked from you in the paper, how would you verify provisions and contingencies in case of branch of a bank? So you would write these 4 points, that all the legal requirements, all the regulatory requirements for making such provisions have been complied with. if you fail to remember any specific point, you can write these kind of general points in many situations. Okay. Obtain an obtain an understanding as to how the bank computes provision on standard assets and non-performing assets. It will primarily include checking the basis of classification of. Yes, Srinivasan, I would be coming to your point later on. It will primarily include checking the basis for classification of loans and receivables into standard, substandard, doubtful loss, and non-performing assets. And obtain the detailed breakup of standard loans, NPAs, tax computation provision from banks management. So all these points would be verified. How tax provisions computations are made, and any other provisions are made, then the auditor would inquire into their reasonableness, the basis for making such provisions, and he would get explanations from management. So students, first of all, we shall be doing few MCQs and one case study, and then we would be going through your pending queries, if any. Yes, see question number 1. Yes, guys, you are able to see the MCQs. Yes, is the screen visible to you, students? Yes, drop a mail. Is the screen visible to you? Okay. So see question number 1. Simple question, just related to simple calculation of drawing power. Tell me what should be the answer. These figures are given. Yes. What is the answer to question number 1? Yes, Nitin, the Zoom chat will be opened only in the last 15 minutes. Yes, yes. Few people have answered. Kiran Kumar, Dilip, Sanya. Yes, what about others? Only 5, 6 of you have students responded, whereas there are 23 participants. So I think 20, at least 20, 21 of you are students. Yes, send your mail, students. Send your replies on BOS mail. So still, guys, still 7, 8 responses have come, but I am pretty disappointed to see your responses in respect of such simple answer to such simple questions. Except 2, 3 students, all of you are giving the wrong answer, whereas there is no technicality, no issue involved in this question. And I had explained to you this question, this calculation at length. We had done also an example during our last session, which is given in your module, and that was pretty technical. There were some issues in that example, but this is damn simple, and still you are calculating it wrongly. How you can do that, students? So it was a simple. If you go step by step, there are two things: stocks and debtors. So what is the value of stocks? 50 lakhs. And what are the creditors? 10 lakhs. So creditors are to be reduced for calculating DP in respect of stocks, 40 lakhs. This is paid up stocks, paid stocks. What is the margin in respect of stocks? 25%. That is 10 lakhs. So DP for stocks is 30 lakhs. And what is DP for debtors? So many of you have forgotten about debtors. The what the question states that 50 lakh was sanctioned to borrower against hypothecation of paid stock and debtors. It means that DP has to be calculated both against stock and debtors. And what is debtors? What is the value of debtors? 20 lakhs. What is the margin on debtors? Margin is 25% again, 5 lakhs. So DP for debtors is 15 lakhs. What is the total DP? 45 lakh. So answer is 45 lakhs. So some of you, Tambeshwari, you have written this D by just calculating this. You have left out this portion. Srinivasan, you are also writing D. Sanya, you are writing C. Sanya's answer is correct. Dilip, your answer is also correct. Neeru Ben, how you are calculating B 50 lakhs? I fail to understand. Nitin, your answer is right. Rath Malini, your answer is also right. So guys, this was pretty simple. You probably you have not read the question. A borrower submits statements of following current assets charged to bank. It is there in the question that following current assets are charged to the bank, and it is also written that CC limit was sanctioned to the borrower against hypothecation of paid stock and debtors. I had told you that it can be against hypothecation of paid stocks only. It can be against hypothecation of paid stock and debtors. Or it may be simply against the hypothecation of book debts only. Any situation can be there. But still you are not arriving it correctly. Simple calculation was there. Yes, have you understood, students? Yes, is the point clear to you guys? Please drop a mail on BS. I have not received mail from those who have answered wrongly. Tambeshwari Srinivasan, the mail should come from your side that in fact you have understood. Yes, Tambeshwari, yes. If it is only against hypothecation of stocks, then debtors won't be included. So you have to read the question and do not just follow the steps blindly. So you have to see what the CC limit is against, what is the security. It is twice the question is hinting that the CC limit is sanctioned to the borrower against hypothecation of stocks and book debts, and it is also stating that borrower is submitting stock statements, statement of current assets showing the value of following current assets. What else you require? Okay. See question number 2. Which of the following is an example of interest earned? Now, there was a major item in interest earned in profit and loss account. This is interest earned. Now, what does the question ask? Question asks, which of the following is an example of interest earned in profit and loss account of a bank? Yes, send more mails, students. Send more mails. Yes, this almost this all of you have answered rightly. Yes, answer is A. Discount on bills. Just now we have discussed this point. It is in the nature of interest. Okay. And all others would fall in other income. Clear? Yes, Nitin, you are asking me MCQ answer के zoom करवा दो means you want me to open Zoom chat for MCQs. This is what you are saying? Yes, uh, Nitin. Yes, Nitin, confirm. Is this what you are trying to say? Okay. So, Manish, can you open the chat, please? Hello, Manish. Manish, you are able to hear me? Hello, Manish. Hello, tech support. Manish, are you able to hear me? Okay, students. So, whenever he joins, I'll get it opened. Which of the following statement is not true? Which of the following statements is not true? So, three statements are true, one is not true. Which of the following statements is not true? Now, students, read these statements carefully. Yes, Manish. Yes, which of the following statements is not true? Only three responses have come. Hello, Manish. So, guys, some of you have answered this rightly, some of you have answered incorrectly. It means the concept is not clear to you, to all of you. So, the correct answer to this question is C. All the three. I had told you what are SMA accounts. Simple funda, simple concept. SMA accounts are those accounts which are in standard category, but they are showing some stress signals. If corrective action is not taken, they may turn into NPAs in future. Okay, so SMA are type of non-performing assets. This statement is false. It is not true. They are performing assets. They are standard accounts and they show stress signals. All these three statements are right. This is false. Here, just go to the basic concept, basic fundamental of a term of an issue, and then try to see which option is the right in accordance with the framing of the question, and carefully uh, no, chat is enabled. Dilip, actually, I wanted to get interactive talk also opened. Okay, chat. I already know it is open. Next, question number 4. And the balance sheet and profit and loss account of a bank are prepared in accordance with forms prescribed under which law? Very simple. We have discussed n number of times. We have discussed this n number of times. So why I am talking with you again and again? Because the things get into your head. Yes, the balance sheet and profit and loss account of a bank are prepared in accordance with forms prescribed under which law? Question number 4. Yes, this every one of you is writing correctly. Banking Regulation Act 1949. Everyone, Tambeshwari, Pranav, everyone, Srinivasan, and all others. Bhumika, yes, you are right. So that it is the third schedule to Banking Regulation Act. Remember Form A, Form B. Form A for balance sheet, Form B for profit and loss. Okay. See next question. Question number 5. A borrower is availing a term loan from branch of a bank. The interest in account is fully serviced. The interest is the party is regularly paying interest. Service means the interest is being recovered by the bank. However, 4 monthly installments are overdue as on 31st December. Which of the following is correct? Yes, only 4 5 answers. Other students also send mails. Students, it doesn't make difference if you get it wrong. It is just a practice session to make you familiar with the things, to make you familiar with the concepts. Yes. So many of you have written correctly, but what about Dilip and Tambeshwari? You have given wrong answers. Nancy, you have also given wrong answer. So see, in respect of a term loan, read every word carefully. Do not just read a question on in a casual manner. Take a When you are studying, take a pen or pencil and underline the things. Say borrower is availing a term loan from branch of a bank. What it is? Term loan. The interest in the account is fully serviced. It means it is fully paid by the borrower. The branch has recovered it. It is okay up till now. However, 4 monthly installments, but principal amount is overdue as on 31st December. How many? 4 monthly. It means 30 into 4, about 120 days or more. So in some case, in some months, days may be 31. It is not written, but anyways, it is greater than 90. So what was the requirement? What was the guideline in case of a term loan for being classified as NPA? If installment of principal and or interest is overdue for more than 90 days. Now what is happening here? Interest is being paid on time, but installments are overdue for more than 90 days. So what the account is? Account is NPA. Answer is option C. How, Dilip, you are writing option A? This is the right option. How it is standard account? This is totally wrong. And Tambeshwari, you are stating it is option B. Sorry, Nancy, you are saying so. Tambeshwari is saying D. All the options are wrong. No, no, Tambeshwari, what did you think? I thought that it is going. What is going? Oh no, you have to put a lot of effort in having a clarity of thought. This topic, this issue was explained by me at least twice, thrice, many times. Yes, drop a mail, students, that it is clear to you, that the concept is clear to you. Yes, is it clear to you, Tambeshwari? Now see question number 6. Yes, answer to this is C, assignment. So it was a memory based question. In case of LIC policies, the policy is assigned when you transfer the when you create a security in favor of the lending party. Yes, Ankit, your answers are visible. You have written correctly. Okay. See question number 7. Students, and my request to you is this is very simple question, but attempt it after reading it carefully. Please read it carefully. Question number 7 and then answer. I am telling you in advance that few of you are going to commit mistake in answering this question. Yes. Question number 7, yes. Yes, guys, only 4, 5 responses have come. Question number 7. Yes, so many of you have answered it rightly, students. Answer is B. And how two of you, Srinivasan and yes, Niruben and Ankit, you are also writing it wrongly. Srinivasan, you are writing it D. Tell me how it is D. And Ankit, you are writing it C. And Niruben, you are writing it at again as D. Letter of credit is a non-funded facility. Okay, this you know. Letter of credit and guarantees are examples of non-funded facilities, and foreign bill purchased and discounted. Students, just now you have correctly answered a question like discount earned where it is shown under the income head. If it is an advance, that is why interest is earned on that. Simple application of your concept. One question you are answering correctly, and if some twisting is there, you are answering it wrongly. Bills purchased and discounted is a funded facility. The amount goes to the borrower. The funds are transferred to the borrower. It is not dependent upon something. No, foreign bill is not, be it foreign bill purchased or inland bill purchased. Both are funded facilities, Srinivasan. What difference does it make if the bill is inland or foreign? So I had given you an example of an exporter also, that if an exporter gets bills discounted, which he has raised on its overseas buyer, then the funds are actually transferred. So it is an example of funded facility, and first facility is non-funded. So letters of credit are non-funded facility, and foreign bill purchased and discounted are funded facilities. So by just writing the word foreign or inland, the nature of a facility doesn't change. Yes, see question number 8. Which of the following statements is incorrect? Now be particular. The question is asking from you is which of the following statement is incorrect. So 3 statements are correct, 1 is incorrect. Yes. Answers to question number 8. Only 3 responses have come. 4 rather. No, so many of you are writing it incorrectly. Bhumika, you are writing B. B is correct. Banking Regulation Act and Companies Act both apply to commercial banks. I told you that Companies Act also applies so far as it is not inconsistent with the provision of Banking Regulation Act 1949 Section 1 of Companies Act. A is also correct. Commercial banks consist of public sector banks, private sector banks, and foreign banks. Commercial bank means those who are engaged in the commercial business of banking, means they accept deposits and lend money. So foreign banks are also doing the same things. Haven't you seen foreign banks uh, lending for cars? Private sector banks also lend, and public sector banks also accept deposits and lend. And D, commercial banks also provide term loans. This is also correct. They provide term loans. This function is not merely confined to development banks. And C is incorrect. This is incorrect. Commercial banks also lend to small and marginal farmers. This function is not merely confined to rural regional banks, but commercial banks also do this. So C is incorrect. Tambeshwari, you have written A, which is totally incorrect. C is incorrect. Okay. Yes. Question number 9, students. Which of the following statement best exemplifies the meaning of term asset classification in term of audit of advances of a bank? The question is simply asking from you what is the meaning of asset classification in the context of advances of a bank. So you have to select the most appropriate option. कि उसका मतलब क्या है वो ये पूछ रहा है asset classification. What is the meaning of asset classification? Which of the following options best exemplifies the meaning of term asset classification? Yes, question number 9. Yeah, Dilip, Ankit Mishra, and Sanya have answered. Yes, students, what should be the most appropriate option for question number 9? Yes, answer is option B. So, Banking Regulation Act states the framework for legal disclosure of advances like for term loans, bill purchased and discounted, cash credits, and sectoral classification like priority sector advances and all that stuff. So asset classification means how the asset has to be classified. It is to be categorized on the basis of period from which it has remained non-performing and seeing into the realizability of dues. Yes. Which of the following statements is not true? Not true about payment banks. Yes, which of the following statements is not true about payment banks? Question number 10. The answer is hidden in the question itself. The answer is hidden in the question itself. Dilip and Karan Kumar. Yes, what about others? So the so students, if you remember the meaning of payment banks, what payment banks, you can see that they are meant um, for enabling payments of the account holders. As the name suggests, payment banks, their primary purpose is to make payments. Okay. So how, if you think logically, how payments can be made if somebody has balance in its account? So therefore, payment banks can accept demand deposits only up to a certain limit. There is a restriction placed that payment banks cannot accept demand deposits beyond, I think the amount is rupees 2 lakhs. Payment banks Cannot issue credit cards. That is true. Cannot issue credit cards. That is true. Because if you issue credit card, then you are lending for some period. Okay. Payment banks can issue ATM and debit cards. This is also true. Because this is how the account holder should be making payments. This is false. This is not true. Payment banks can lend to small borrowers only. Payment banks cannot lend. Payment banks cannot lend. Small finance banks can lend, but payment banks cannot lend. Yes, option B is the right option because it is false, and the question is also asking about false. Yes, students, is it clear to you? Is the question clear to you? Okay. Now 11th. Special mention accounts in case of banks are again question related to SMA accounts framed in a different manner. Again, I do not expect any of you to make mistakes in answering this question. Yes, only 4 responses have come, guys. What about others? Students, send your responses quite fast. Yes, all of you are writing correctly. And Ankit, how you are stating A? Standard loans, I have told so many times that SMA accounts, special mentioned accounts, are in fact standard loans. They may turn into NPAs in future. They are not NPAs. So right option is option B. And within all, you are again writing incorrectly. Restructured loans has nothing to do with this. All restructured loans are not special mention accounts. These are standard loans. Yes, see question number 12. Now, a borrower has availed a term loan from a bank for purchase of machinery for business, okay, and has delivered original title deed of his residential house to the bank. In this case, dash and dash are primary and collateral securities. Respectively, you have to state which one is primary security, which one is collateral security. Further, by delivering original title deed to bank, security by way of dash, by way of which process is created. Yes, question number 12. Yes, question number 12. Yes, only two responses, three responses have come. Students, again, the concept doesn't seem to be clear to you. The bank has granted loan for purchase of machinery. So what type of security machinery is in this case? It is primary security. So machinery is a primary security. Okay. And what is the additional security? Residential house. Residential house is the collateral security. So, and we had understood that when a borrower deposits original title deed to the bank, he merely delivers original title deed to the bank and he doesn't do anything else. Security by way of equitable mortgage is created. In case of registered mortgage, it is required to be registered in sub-registrar's office. The document has to be registered. So option C is the right option. And how you are writing, Anjali, you are stating A. Neeruban, you are stating B. So Neeruban, how you are stating B? Residential house is collateral security. It is not the main security against which bank has lent money. The bank has lent money for purchase of machinery. So the machinery is the primary security. So the comfort zone, the security, which additional security in the nature of residential house which the bank has taken, it is known as collateral security. Yes, clear. Number 13. See question number 13. Which of the following is not a legal disclosure requirement relating to classification of advances in financial statements of a bank? Question number 13. Yes, three responses have come and you have written answer D, which is correct. Agriculture loans advances have to be classified with this breakup in accordance with the third schedule, Form A of Banking Regulation Act 1949. So breakup is legal. Breakup is to be given in this manner. Okay. Yes, Pranav, your answer is also right. Question number 14. Yes, students. Question number 14. X has availed car loan from a bank. He is not regular in depositing EMIs in car loan account and EMIs are outstanding for more than 90 days. He has also taken housing, there should be loan here, housing loan from same bank which is running regular. there are no overdues, but days. Overdues are for more than 90 days. Which of the following is true? Yes. Question number 14. Yes, answer is obviously A. And Nitin, how you are saying answer is B? No, no, I had told you that NPA classification is done borrower wise and not facility wise. This we had discussed in last lecture yesterday. So if one loan account is regular and another is irregular, then both would be classified as NPA. Okay. Yes. Which is included in other income in financial statements of a bank? We did it just right now, sometime back, today itself. Very simple. Yes, all of you have answered correctly. Answer is option C, loan processing fees. This would go into interest earned. This would also go into interest earned. This would also go into interest earned. So answer is option C. Next, 16th and 15th B. How, Srinivasan, you are stating B, interest on investments. Any income in the nature of interest is to be shown under the head uh, interest earned, whether it is interest on investments or interest on advances. See, see if you see your module, what does interest earned include? Interest income on investments. Clear? So try to read between the lines and carefully. What is percentage of provision required for in accordance with regulatory norms? How much provision is required to be made in case of NPAs which are substandard? Very simple, just memory based question. Yes, the answer is B 15%. Students, you have to remember this. Ankit, you are writing it as 25%. This is in respect of D1, doubtful assets. Dilip, you are also writing it wrongly. So you have to remember the table which is given in your module. So in respect of substandard assets, a provision is 15% is required to be made in respect of outstanding loan amount. Okay. Again, which of below is not an example of funded loans? Again, I will make sure that you people do not forget these concepts. If you are serious, these concepts would get cemented right here. Yes, what is the answer of question number 17? Yes, quickly, come on, students. Which of below is not an example of funded loans? Yes, answer is option D. You are right. All of you are right. This is non-funded loan. All are funded loans. Funds are transferred. Next. See question number 18. Now it asks you to compute provision in respect of a doubtful asset which has been classified as D1. Outstanding balance is given and secured amount is given. Yes. Question number 18. Yes, only one response has come from Dilip. Yes, students, waiting for your responses. Question number 18. The particulars of an account are given, which is classified as a doubtful assets. D1, outstanding balance is given, secured value of security is given, and provision calculated by the branch is given. You have to tell whether the provision made by branch is correct or not. Which of the options is right? Yes, anyone? Few answers have come. So students, look, Anjali, you are writing A, but this option is not right. The right option is option B. Dilip, you have stated it correctly. So how you are going to calculate the provision for doubtful assets D1? So outstanding balance in the account is 50 lakhs. What is the secured portion? Out of 50 lakhs, 40 lakhs is secured. It is fully backed by a security. So secured amount is 40 lakhs. So provision is 25% of 40 lakhs plus 100% of unsecured amount. So what is unsecured amount? Unsecured amount is 10 lakhs. So 100% of 10 lakhs is 10 lakhs and 25% of 40 lakhs is again 10 lakhs. So the right provision is 20 lakhs. The branch should have made provision of 20 lakhs in accordance with regulatory norms. So the answer is option B. Yes, Ankit, you are right. Now see question number 19. Any amount due to the bank under any credit facility is overdue if simple, but be careful. This is a simple question, but you have to be careful. Any amount due to the bank under any credit facility is overdue if yes, if it is not paid on due date fixed by bank. C is the answer. Bhumika, how you are writing paid within 90 days? First, it would become overdue. Then it has to remain overdue for more than 90 days to be classified as NPA. The question is asking from you the meaning of overdue. It is there in your module. Meaning of overdue, just see the definition. Yes. See question number 20. A customer has got issue a credit card in his favor from branch of a bank. The customer has got a credit card from a bank. The branch has levied charges in accordance with guidelines in this respect, where you are likely to find above charges in profit and loss account of branch. The branch has levied charges. Where you are likely to find these charges? Yes, only one response has come, students. Yes, you are right. This would be, you would find it in other income. Charges, these are income for the branch. These are not expenses. These are expenses for the card holder, not for the branch. Simple. So students, I think with these 20 MCQs, you would have certainly got some clarity, some confusion, some mist removed from your eyes in respect of these concepts. which are related to audit of banks? Drop a mail, students. Have you gained some more clarity? And Srinivasan, you were asking about this contingencies. Why contingencies are shown here? The name of head is provisions and contingencies. So basically, provisions are required to be made. This is not to be confused with contingent liabilities. So provisions and contingencies, so liabilities in respect of which provisions are required in accordance with the norms, in accordance with the accounting standards. Okay. Yes, Srinivasan, these would be uploaded uh, in a day or two. These 20 questions I would be uploading. Okay. So, students, we shall be taking a short break for 10 minutes now. And thereafter, we will be doing two case studies. Yes, Karan, you are asking why not option A in question number 20? Because the question is asking about charges for issue of credit card. It is not describing any interest which is charged. Okay, clear? So yes, Manish, break for 10 minutes. Yes, welcome back, students. So this is a short case study. Just have a look at it and try to read it. CAB is conducting statutory audit of branch of a nationalized bank. Saurabh is a CA student who is part of engagement team conducting the audit, and he is conducting the audit as per instructions given to him by his senior. The engagement partner has asked him to prepare a summary of non-funded credit facilities outstanding as on balance sheet date. So the following information is appearing in branch CBS data record as on 31st March, as on year end. So this is jottings. These are jottings of the balances as at the year end. So some data is given. Okay. On going through listing of housing loans to the general public, CAB notices. So there are housing loans to the general public for rupees 10 crore. The amount outstanding as on year end is rupees 10 crore. Okay. CAB notices that branch has sanctioned many housing loans of small ticket size ranging between 10 to 20 lakhs. Okay. So in his wisdom, he has assessed risk of material misstatements to be high. He thinks that the risk of material misstatement is high in this, probably due to large number of small loans with the of having a smaller size. So there is a possibility of greater inherent risk and control risk. As a consequence, he has designed audit procedures to perform tests of controls as well as substantive tests. So he has decided to check through testing the controls and substantive tests also. Saurabh has been further asked to go through SMA jotting as on 30th November. Such reports are available from system on monthly frequency. So he is unable to understand the relevance of above audit procedure. So something about SMA accounts. So you once again read this, student, so that we can come to the questions. So I'm giving you 1-2 minutes. I would be scrolling the case study, and you can read this. Yes, Manish. Hello, Manish. You can open the Zoom chat now. Yes, if anybody wants to ask the questions on Zoom, he can ask. Zoom interaction is open now. Yes, there is one Rajat Thakkar. Yes, Rajat, you can ask. Yes, Madhvi, are you a real person or this is a ghost? Yes, Madhvi.
Sir, എനിക്ക്
Yes, who is there? Yes, students, you have gone through the case study. Yes, drop a mail on your BS mails. so that I can switch over to the questions. Yes, students, drop a mail that you have read the case study. Okay. So considering table given in case study, which of the following combination is appropriate example of non-funded credit facilities? So simple, very simple. Now this should come to you naturally. We have done so many questions on this that it should come to you naturally. Which of the combinations out of the loans granted from the CBS jotting is correct in respect of non-funded credit facilities? Which option is correct? Yes, obviously option is option D. LCs and guarantees issued. In all these options, there is there are some funded facilities like bill purchased and discounted. Just right now we have done an MCQ. This is a funded facility. Staff housing loan is a funded facility. Bill purchased and discounted, again it is a funded facility. So we have to tell the example of non-funded credit facilities. So option D is the right option. Yes, all of you are writing correctly. Great. Now second question is not particularly specifically related to this chapter, but it tests your general understanding about the auditing, what you have read up till now. So see the question number 2. Now CAB has decided to perform tests of controls as well as substantive tests. When he assessed risk of material misstatement to be high due to large number of small ticket size loans. Okay. Which standard on auditing deals with auditor's responsibility to design such tests? Yes. The answer is hidden in the question. Yes, only one response from Sanya has come. Yes, guys, come on. Only Sanya and Dilip have given the answer. What about others? It is not as difficult as you are making it out to be. Yes, 3 responses only. Answer is option B, SA 330. What is the name of this essay? auditor's responses to assessed risks. Like you have forgotten, I think, chapter 3. So the accordance with SA 315. In SA 500, he obtains, it deals with the audit evidence. SA 300 deals with the planning. And after the auditor has identified the risks, he has assessed the risks. Then in response to those assessed risks, he designs his tests, be it tests of controls or be it substantive procedures. So SA 330 deals with this. Ankit, how you are writing A SA 500? So go back to the basics and read chapter 3. Yes. Third should be a cakewalk for you. Saurabh is unable to understand the relevance of going through SMA jotting. Which of the following is most appropriate in this context? Again, SMA question. So first read these three options and then there is this D option. That is why, Ankit, you have to learn. You have to learn and remember. In auditing, you won't fetch any marks without learning and remembering. And of course, understanding should be there. It is only when you would be able to apply the concepts. So I am showing you all the points again, guys. These are 3 points, A, B, and C. I am waiting here for few seconds. And this is point D. Yes, what should be the answer? Yes, answer is option D. You are right. Nitin, how you are writing A? What is SMA account? Again, I have told you. Its purpose is not to tell that how big an account is. Special mention account is an account which shows some stress signals. They are standard accounts, but they are showing some stress signals. So how it would help the auditor in identifying those accounts which have been shown as SMA in past periods during the year, and then they may not have been classified by the branch as NPA. So it would help him in identifying those accounts. Yes, option D is the right option. Okay. So I'll do another case study which is there in your module. So see this, read this case study. Do not see the answers from your module. Now, CAM is conducting statutory audit of branch of a bank. During the course of audit, it is noticed as under that loans under Kisan credit card are given by bank to farmers to meet their short-term needs from credit needs for cultivation of crops. It means agricultural loans are there. In respect of one agriculture advance classified under Kisan credit having an outstanding balance of 20 lakhs as at the year end, there is no transaction in the account since last 90 days. Okay. So the loan has been given by the bank for cultivation of paddy. So short-term loan, it is a sort of short duration crop. So the said loan has been granted for cultivation of paddy, which is harvested in a period of 3-4 months from the date of sowing. So the description shows that it is a short duration crop. The branch has classified the advance as standard asset. Okay. So first of all, let us see question related to this point. So you have understood the point. The loan has been given for 20 lakhs. There is no transaction in the account since 90 days, but it is an agriculture advance. Okay. So branch has classified the said advance as standard assets. So what is the question in this regard? See, which should be the right answer? Yes, Srinivasan, that you have to practice. Again, repeat it in your mind. Practice, not basically this happens when you do things in casual manner. Like you just study for half an hour, 1 hour, do some concepts and then leave. So this is not the proper way to study for CA course. You have so like take a chapter, say you are doing this chapter audit of banks. Now try to finish it at a stretch in 2-3 days. Okay. Remember, and apply, and then try the questions. So that is the best way. And then once you are done with the chapter, then try to revise it. First, you are doing it in 2-3 days, then you would be able to do it in 1 day. Then in another revision, you would be able to do it in half day. Okay. When that situation comes, then you know that now I have the confidence to attempt the questions. Yes. Oh no, guys, the answer you are giving is no, that choice you have to make, Srinivasan. So if you are not able to cop up with your works, since you are working also, then I'm afraid you are in two boats. So either you take a leave for a good period of time and then study regularly, or if you say that you will be able to pass the exam by reading for 15-20 days, then I am sorry, then you can't do. No, yes, answer is C. The classification made by branch is proper. It is an agriculture loan. So agriculture loan becomes NPA only uh, uh, in case of short duration crops when there is when it remains overdue for two crop seasons. So here it is there is no transaction in the account for 90 days. It doesn't matter. For 90 days, just in 90 days, just expenditure would have been made. Even harvesting would not have been complete. So you can apply that simple logic. Answer is option C. Yes. Number 2. It is observed that the account of one borrower having cash credit limit of 50 lakhs was taken from another bank. So CC account, some borrower was having with one bank. So another bank took over that account. The proposal was sanctioned by branch manager instead of immediate higher authority as required by manual of delegation of powers of bank. So in banks, there is a procedure that when loan is taken over, then it doesn't fall in the immediate sanctioning power of the branch manager. It goes to one level higher, one step higher. So the branch has not followed this instruction in accordance with the manual of delegation of powers of the bank. So what is the question in this regard? Regarding taken over account from another bank, which of the following statements is most appropriate? Question number 2. Yes, yes, students. Only 3 responses have come. Yes, answer is option C. It is a serious violation of laid down procedure, serious violation of internal control procedures in respect of advances. And such type of instances are likely to be reported by auditor in LFAR. LFAR specifically asks about such type of instances. Okay. Now third issue. Now see this issue. It is noticed that head office of blank bank has flagged a savings account maintained in branch in which interest was wrongly paid at a higher rate due to wrong data fitting entry. So the question is saying, say the interest rate was say 3% and say it was fed by mistake at 3.5%, by which the interest was wrongly paid at increased rate to a savings account. Now situation has been rectified by debiting excess interest paid in the account. So when the mistake came to the notice, so actually the bank made a debit. However, there was no balance in the saving account. As a result, there was overdraft was created in the savings account. So now instead of having deposit in savings account, we have a debit balance in savings account. Okay. The matter was immediately informed to account holder. However, he has not turned up for payment. His matter was informed to about 6 months ago. So 6 months have passed by, but the borrower has not paid the account holder has not paid the debit balance in his saving account, which has arisen on account of excess interest paid. So what is the question in this regard? See the question. Yes, any answers? Yes, answer is option B. All of you are writing correctly because the money has to be paid by the account holder, but more than 90 days has passed. 6 months it is written, 6 months have passed. So the balance is, it is in the nature of overdraft, which has been created willingly or unwillingly. Okay. So next is, there are many cash credit accounts in the branch. Such borrowers are required to submit monthly stock statements to branch showing calculation of DP. So this question is about DP. Yes, tell me which of the option is right? Which of the option is not true? Which of the following statement is not true? Means false about drawing power. Is not true. Yes, you are right, students. Option B is right. This is false. It is not always less than sanction limit. It can be equal to sanction limit also. It is not always less than sanction limit. So slightly question is couched in a language so as to confuse you. Okay. Sanction limit can be equal to drawing power. There can be a case where say sanction limit is 50 lakhs and drawing power also come to 50 lakhs. It is possible. It can be less than sanction limit. If it was written here that it can be less than sanction limit, then the statement would have been true. But it is always less than sanction limit is not true. Okay. And fifth question is, students, again relates to the NPA concept relating to two loans availed by borrowers. So one borrower has availed a housing loan and car loan from the branch. Housing loan EMIs are overdue for 120 days and car loan EMI are overdue for 60 days. So the question asks you to answer this. Which of the following statements is most appropriate? Yes. Yes, students, that's great. All of you are writing correctly. Both housing loan as well as car loan should be classified as NPA in accordance with the RBI norms on asset classification, because NPA classification is required to be made borrower wise and not facility wise. So students, look what we have seen. The different concepts are being, the same concepts are being asked in different ways in different questions. Okay. So sometimes you know the thing, but you may end up answering the wrong option because the question is structured in such way. So for these things, students, you have to remember well, you have to learn well, you have to understand, and you have to practice. Okay. So that's all for today. So we'll meet again on 21st on the coming Tuesday for our last chapter. That is chapter 11, ethics and terms of engagement. So till then, have a great time. Thank you guys. Yes, over.